The broadcast is now starting. All attendees are in listen-only mode.
All right, I see people are still trickling in, but in the interest of time, we'll get started now. Welcome to the Reef Resilience Network webinar, How Insurance Can Support Reef Resilience. Thank you for joining us today. My name is Tamaki Bieri, and I'm the Coral Restoration Project Director at the Nature Conservancy and your host for this webinar, which is brought to you by the Reef Resilience Network with support from the Nature Conservancy and the U.S. Coral Reef Task Force. The Reef Resilience Network connects marine resource managers and practitioners with peers, content experts, tools, and operational knowledge to innovate and accelerate solutions for improved conservation and restoration of coral reefs and reef fisheries around the world. This includes sharing the latest science and management strategies to keep busy managers inspired and in the know with webinars such as these. Before we begin, I would like to go over a few housekeeping items. Today's webinar will be 1 hour. A recording of the webinar will be posted on the Reef Resilience YouTube and emailed to the mailing list. There will be a question and answer period at the end of the presentations. There are 2 ways that you can ask questions. You can use the question box anytime throughout the webinar to send questions, and we will keep track of these for the end of the presentation. Or you can raise your hand during the Q&A session of the webinar, and we will call on you to ask the question yourself. You raise your hand by clicking on the small hand icon on the toolbar on the left of your name. If you're having technical issues, such as trouble hearing or seeing the slides, please send us a message via the question box and we'll try to resolve the issue. If you don't see a question box, please email questions or comments to resilience@tnc.org. Before we dive in, it would be great if you could tell us a little bit about yourself by answering the following questions. I'll give you a moment to respond to each question and we'll then tally your responses. Thank you for participating in the poll. So it looks like most participants are from the Caribbean and Atlantic region, followed by the Pacific. I think the second poll is about to get launched. Yes, there we go. Right, most of you are marine resource managers or scientists and researchers. We're so excited to have you here. I'd now like to introduce Brian Beck, who is with the Coral Reef Conservation Program at NOAA and is the co-chair of the U.S. Coral Reef Task Force Working Group on Restoration.
Thanks, Tamaki. Funding for coral reef protection and restoration is limited, and Reef Insurance provides a new opportunity, and so we're really excited to be able to have this webinar. Some of you may know, but the U.S. Coral Reef Task Force is comprised of leaders from federal agencies, U.S. states, territories, commonwealths, and the 3 freely associated states. And this was originally going to be a presentation as a part of an in-person meeting in Hawaii, but when that was canceled, it provided us with this great opportunity to host this to a broader audience virtually. So the Task Force Restoration Working Group would like to give a big thank you to TNC for doing the heavy lifting on making this happen. This is part 1 of a three-part series. And while this first one is going to be virtual to a broad audience, the second part is going to be in the spring meeting around April of 2022. 6 steps to ensuring a natural asset, an introduction. So that's going to be more of a presentation, and then we're still planning on having a full hands-on workshop in Hawaii, and that task force meeting is currently penciled in for late August, early September. So we're looking forward to that. But for now, we have 2 great speakers. Our first speaker is Philippe Brahim. He is head of Americas for Public Sector Solutions. He is developing risk transfer solutions and providing risk services to the public sector on natural catastrophes, climate risks, agriculture, credit and survey, as well as life and health in North America and Latin America. I will now pass it over to Philippe for his presentation.
Many thanks, Brian, for the introduction. It's a pleasure to be with you today and participate in this webinar. Also, a big thanks to TNC, the Reef Resilience Network, for organizing the event. So in my presentation, I will tell you quickly about Swiss Re. I will tell you about the role of insurance in general, and particularly how insurance can protect reef and enable nature-based solutions. So a few words about our group. We're a global reinsurance company, 150 years history, very large asset base. But if you think about Swiss Re, there are 3 things that we like to point out that differentiate the group in the insurance world. It's, first of all, the direct access to clients. We are very keen to be very close to our clients, insurance clients, but also partners at large. Then it's the expertise and knowledge of Swiss Re. We share a lot of this expertise. We publish a lot. You will find Sigma reports, all kinds of information on our website. And this knowledge is something very important for us to share and leverage as a differentiating factor. And then finally is the capital strength, right? The capital position of the group to absorb extreme events, what we call shocks, insurance shocks on the property casualty side or life and health side. It makes us a very long-term partner with our clients. And when it comes to clients, obviously we serve primarily insurance companies. We also serve corporations. But since 2011, we have created a team dedicated to develop solutions for governments, for municipalities, for states, for NGOs, to address and mitigate risk, and particularly exposure to climate risk, in order to increase their resilience. And that's the team I'm heading in the Americas, which we mentioned here in this slide. So if you go to the next slide, I wanted to talk to you about the challenge of the protection gap. It's a clear challenge we have identified, Swiss Re and the whole industry, which is basically the difference between the economic loss of events and the actual insured losses, the ones that are covered by the insurance sector. And you see the gap. And you see the challenge of the insurance industry to close the gap and to develop solutions, to develop answers to our clients to address this protection gap. And we track it at Swiss Re. You see here, this timeline for natural risk, natural catastrophe risk. We also have developed a resilience index that measures the resilience of a country, or the role of insurance in strengthening resilience of markets. So we're very passionate about this topic. It's very unfortunate to see that the gap remains large. You can see here 70% of the global economic losses actually caused by natural catastrophe, are uninsured. And so that's the challenge. Now, on the next slide, if you think about the solutions that are available for our clients, and if you think specifically about government organizations or NGOs, they have multiple ways to respond to an event, a crisis, to build back their resilience. And they have therefore access to all these tools. They are here in this illustration on the left side to address and respond to shocks, being economic shocks, environmental shocks, or social shocks. And you can be preemptive about it. You can anticipate the impact, or you can be reactive about the event. And we believe the insurance solutions or the risk mitigation solutions are on the preemptive side What on the reactive side, you will be raising debt or you will be increasing taxes to respond to an event, to regain resilience and to strengthen back your situation. And so that's why we believe risk management is really the good tool, the appropriate tool to think about risk, to manage risk, and particularly climate risk and other natural disaster. And all the risk management practices in insurance, we believe they are very important in allowing our clients to anticipate risk again and to make sure that they have the right view on the impact and the budget they need to allocate to respond to an impact. And again, on the right side of the slide, you see what we believe are all the benefits of insurance solutions as a preemptive tool, right? It really, when it comes to giving our clients certainty about their budget planning, so they know where they're going to be allocating funds in case of a crisis. There is no payback obligation, unlike loans or if you have to raise debt. The payment can be done quickly. There are solutions really much tailored to that. Parametric Insurance, I'll talk about it, and Simon will give you more detail about those kind of solutions. Ultimately, there are all kinds of benefits on insurance. So again, insurance, we believe, is the right solution or tool to think about anticipating, preparing for risk. Now, there are different types of insurance solutions, which I wanted to illustrate here on this slide. It's a bit introductory, but maybe helpful to you to think about what kind of insurance are there available. And here I am highlighting the two main well-known type, which is indemnity insurance and parametric insurance. In the indemnity insurance case, it's really much the classic one, the one you are as an individual, as a company, aware of. There is an event, the damage must be assessed, claims have to be filed, there will be a review, possibly an adjuster, and then at some point the claim is paid. That takes time. This process is lengthy, and it's a real challenge if a community is in need for rapid support, access to cash. That's why there is another type of insurance, what we call parametric insurance. And they have multiple advantages in terms of being a fast pay or very flexible. And the way it works is that this parametric insurance, we see it as innovative. It's quite recent, but at Swiss Re we've been developing it for a long time. First specificity is that the insurance is based on the measurement of an index or a natural phenomenon. And the index can be based on the wind speed or the magnitude of an earthquake or heat, cold waves, and things like that. So it's really the measurement of an index or a natural phenomenon. And then the payment is made when a threshold that has been defined or an index that has been defined is exceeded. And in a nutshell, that's how we differentiate the two solutions. And you will see later on, I will talk to you about some of the solutions we have developed, which are parametric based. And Simon also will go more deep in some of his examples on parametric insurance solutions. Now, I mentioned the advantages when it comes to fast payout or flexibility and transparency, but there is also something to keep in mind, what we call the basis risk, which is the risk that the insurance payout may actually deviate from the actual loss. And so we always look at reducing this basis risk when we engage with our clients. Now, on the next slide, let's talk a little bit about nature-based solutions and Reef, because we do believe the benefits of insurance can definitely be applied to protect natural assets such as reefs. And as you all know, and you're all professionals on this topic, these natural assets often are taken for granted, but we know that investing in protecting these assets is a very effective measure to support climate adaptation, right? So that's why at Swiss Re, we see this nature-based solution, nature-based insurance solutions as a very strategic focus for us. That's why we engage with many partners, such as the TNC or the NOAA or WILIS or academics, to identify the risk and develop solutions for clients. And that's why we're very, again, pleased to be participating today in the event. While we develop solutions, we'll be working with different stakeholders. And here they are listed on the slide. It could be businesses or corporations. They want to protect the revenues coming from natural assets. It could be government agencies. They want to clean up and restore quickly natural sites after an event. Or it could be investors. They want to protect green projects against delays, or they want to protect their investment return. So all these stakeholders will be clients and partners of Swiss Re in developing nature-based solutions. Now, on the next slide, you have some of the key considerations, key questions you need to have in mind if you are considering designing an insurance solution to protect natural assets. And here they are, the four key aspects. First of all, and the first one is to be clear on the asset. What are you protecting, right? Is the natural site, or is it the revenue from the site? So very clear about what is this natural asset. Then you need to understand the risk and the threat, right, of this asset, of this natural asset. Is the threat coming from wind, from the earth, earthquake, or storm surge? Then you have to think about the frequency of this threat. How often does it take place? So all these considerations are very important in developing an insurance solution. The third aspect is about defining the cost of the damage, or what is expected to be paid through the solution. If it is about repairing the reef, or restoring or replacing a natural assets, what will be the cost of the damage? That will define, obviously, the solution, the insurance solutions. And then there is the cost, right? There is a premium to be paid for an insurance solution, always, for your car, for your house, for natural assets. But who pays the premium? And often we come across situations where there are a lot of parties and partners interested in developing a solution, but they have not figured out what will be the source of the funding of the premium to pay for the insurance solution. It's very important. And you pay not only for the first year or for the pilot, you need to think about the following years, so the solution is sustainable over the long term. Also, during years where there are no events, but you need the insurance solution for the following years in case events take place. So all these four aspects are very critical. Now, in the next few slides, and that will conclude my presentation, I want to share with you two transactions we worked on. We're very proud of these transactions. They are all flagships when it comes to nature-based solution. The first one is the Mexico coral reef cover we developed in 2017 for Quintana Roo. And we all know how the bay of Quintana Roo and other bay in many parts of the world are exposed to hurricanes. And when it comes to Quintana Roo, it was back in 2005 where the Hurricane Vilma came along around sometime October, and the damage of Vilma showed that the beaches that were protected by the coral reef were actually less damaged than other hotels, other beaches on the coast. And so the research was conducted, scientific research was conducted to assess the benefits of the coral reef. And the benefits were clear in terms of reducing the power of wave surges, reducing the energy of the storm, and therefore ultimately reducing the damage on the land, on property, and on people. That's what we engaged with the TNC, with scientists. We engaged with the local Mexican government, with local universities, and also with hotel property owners to analyze the ecosystem of the Quintana Roo Bay and develop an insurance solutions. Again, 2017. Now, this parametric insurance solution we developed has three very interesting aspects. The first one was about the use of technology to develop the product, where the parametric solutions was based on wind speed in that case. Wind speed applied over GPS areas. So technology out of the GPS area assessment and wind speed assessment was very important to develop the solution. The second thing was the entity that was created to administer the solution. It was the coastal zone management that had to be created to fund the solution and then process the payment if the solution is triggered. And the third aspect is the good news that it actually worked. It paid out. The solution paid out. The index was triggered in 2020, and roughly $1 million was paid after Hurricane Delta 2020 to restore the reef. So these solutions work. That's very important. Now, the second example is a construction risk coverage. It's more of a more classic insurance coverage in the sense that back in 2019, there was a restoration of a sand beach on an island in the Netherlands, the Texel island. And the project, the construction project to restore the beach needed insurance to get funding. It was about moving 5 million cubic meters of sand or marine grass to create a new coastline to mitigate erosion risk on the island. So there again, we team up Swiss Re with water management company, with construction engineers, local authorities, to develop a very comprehensive construction insurance solution. But it's I would call again a traditional insurance solution applied to a very innovative natural project. And then, this project and the restoration of the dike allowed to protect the land from storm surge again, protects biodiversity of the island, protects the residents, and the tax income that the local authorities were getting from the visitors. So that was the second example I wanted to share with you. That concludes my presentation. I think I hand it back to Brian, and I'll be happy to take questions at the end. Thanks.
Thanks, Philippe. Yeah, that was great. And again, we will hold questions until the end. And so now our next speaker is Dr. Simon Young. He's part of the senior management team in Willis Tower Watson's Climate and Resilience Hub. Simon has experience in managing implementation of parametric insurance programs from multi-country risk pools to microinsurance, and from covering pandemic to natural ecosystem risk. Simon?
Thanks very much, Brian, and thanks, Philippe, for that great introduction, and thanks also to the Reef Resilience Network and TNC for hosting and inviting myself and on behalf of WTW to talk to you. So I'm going to pick up on Philippe's introduction, and we at Willis Towers Watson set up something we call the Global Ecosystem Resilience Facility 3 years ago. And what we're trying to do is apply a risk lens at the nexus of climate change and biodiversity loss. These two big issues have come together increasingly over recent years, and I think one of the key takeaways of mine, certainly from Glasgow and COP26 and Climate COP26, was the fact that there was a Nature Day, that it got a very high profile, and I think the meeting of the climate agenda and the biodiversity and broader environmental conservation agenda has been completed and is here to stay, and we look forward to cross pollination of ideas and concepts between those two areas, which haven't always worked totally together. So we're looking at kind of 4 different areas under the GERF. One is actual consulting projects, trying to help different clients on bringing innovations and research and development for tools and solutions, which we have a global focus. We've done a lot of the work so far in the Caribbean basin, but we're working a lot in the Pacific as well, and in Asia, and a little bit in Africa as well. We are doing terrestrial, coastal, and marine ecosystems, but again, a lot of our work has been in the coastal zone and in the nearshore marine. We have strategic engagements across both public and private sectors. This includes working with investors, investors in conservation, investors in green and blue bonds and other similar instruments, all the way to conservationists. And we've created over a dozen major partnerships, most of which are new partnerships to WTW. So these are a new set of clients, a new set of partners, a new set of collaborators for what otherwise is a pretty major player in the insurance and reinsurance broking and advisory space. We also are trying to work all the way from global advocacy, for instance, at COP26 and other international fora and meetings and working groups, etc., all the way to local solutions. We know and acknowledge recognize the need to make sure that solutions and ideas that we have are embedded in local communities and local populations, bringing their local knowledge, the history, but also to make sure that they're working for the benefit of those local populations, as well, excuse me, as well as wider stakeholders. And then we've also discovered that there are a lot of cross-cutting collaborations that we can find within our own company, with existing partners who might not normally be associated with ecosystem resilience and conservation. So it's unlocked a lot of doors and created a lot of opportunities to collaborate, which we think is very important in building out the overall space. Next one, please. So there are two main kind of technical areas of engagement that we've been working on. One is understanding risk, so bringing the tools that we use for understanding what Philip described as the more conventional and traditional insurance policies and processes, built assets, motor cars, houses, businesses, etc. So bringing those tools to understand the risks to ecosystems, to conservation activities, and to coastal and terrestrial environments, which may or may not be protected by natural assets. So that includes catastrophe risk modeling for acute hazards, so shocks like hurricane. So we've developed a hurricane reef risk model in the style that we use for traditional assets. We're also undertaking climate risk modeling for chronic or slow onset hazards such as coral bleaching. We're also doing have activities in ecosystem asset and services valuation, establishing what needs to be insured, what might need to be insured, but also the benefit cost analysis for evaluating which, if any, risk financing options might be useful and beneficial and valuable. And then the final thing is price signaling to incentivize changes in policy and activities. And we think this is a really important feature of our work. It doesn't necessarily need to go into risk financing itself, to risk transfer to insurance, to create or highlight rather the price signaling that we can bring through understanding the risk now and in the future, and therefore being able to cost out what the impacts will be over a future given period of time, and balance that against what insurance might be able to bring to support investments in conservation, to support the protection and resilience of natural assets. So that's one area, and that's kind of both the kind of leading part of doing actual risk financing and insurance, but is also a standalone discipline, which I think we need to recognize and can be useful on its own. But the second bit, which we normally are looking to get to, is the risk financing, so protecting assets and investments in conservation, and maintenance of marine ecosystems as assets, providing economic relief in the face of disruption to economic activities based on the provision of services by natural assets. So business interruption cover, it's called in the technical jargon, for businesses that rely on the services of ecosystems that might be impacted by natural disasters. Increasing the financial resilience of coastal communities as well is something we're very keen to develop. And that can be used, for example, to incentivize stewardship of the marine environment. So using insurance as a kind of a benefit and a reward for better behavior, both in conservation, particularly fishing, having fishing better monitored, having boats fitted with GPS trackers, for example, or being registered, so that they can be monitored and managed more effectively, and that insurance can be an interesting way of rewarding that, signing up for those sorts of programs. And then we also, are looking to capture the risk reduction benefits of ecosystems. And Philippe mentioned the protection benefits of the coral reefs for the Quintana Roo coastline and the hotels and other tourism infrastructure along the northern stretch of that coastline in particular. And we want to try and make that real or bring that into the real economy, and kind of harvest the value of that protective mechanisms that those assets provide, and plow that back into the conservation and protection of those assets. Next one, please. So quickly just describing the cyclone reef damage model as an example of the risk understanding piece. And we've fully developed this on the Mesoamerican reef under a couple of different projects. And then we're nearing completion for the insular Caribbean, so the eastern and northern Caribbean and the islands along the southern part of the Caribbean. And then our intention is to build it out for to be a global model, or certainly globally applicable, with most of the key areas covered in the model. We built it so that it's kind of modular, and we can bring in more or less data depending on the availability of that data. The model includes kind of the capturing the hazard, so historical cyclone tracks and wind fields from that track as a proxy for the intensity of the impacts. We all understand and know that the wind itself isn't what impacts on reefs, but the wind drives waves, and the wind is driven also by the low pressure at the center of a cyclone, and that is a good proxy for the overall impacts of the cyclone on the marine and nearshore environment. And we can then capture, for instance, the maximum wind speed for an event over a gridded area. So we capture the hazard, in this case cyclones, but we can do other hazards as well. We have a reasonable view of the vulnerability of different types of reef to these effects of cyclones, although that is somewhat limited. The two references there are for work in the Caribbean, and there is some work on the Great Barrier Reef, for example, but most of the work or a lot of the work is peripheral, or wasn't concentrating on trying to evaluate actual damage before, or the state of the reef right before and right after a cyclone. So there's quite a lot of interpretation needed in taking data and turning that into evaluating the vulnerability of particular reefs. But we do have the ability to come up with a relationship between cyclone intensity and reef damage, and we can adjust that for leeward versus windward reefs, for example, which we found to be quite important. And there are also other adjustments which we're working on to see if those make a difference as well, and live coral cover is one of those. And then the third piece of the puzzle for a damage model is the exposure, and we're using reef footprints. We've started to work with the Allen Coral Atlas as well, and the great work that they're doing to characterize coral reefs. So we're starting to integrate that into our model as well. We also need live coral cover. So the percentage of live coral is important. And then ultimately we get to the right-hand side, where we can evaluate the number of the amount of damaged coral, and we measure that in hectares, and then we can turn that, for example, into the cost of responding to that damage through emergency action, which, as I'll say a little bit later, is the example that we've already implemented with the Mesoamerican Reef Fund. Next slide, please. Next slide, please. So I'll now kind of describe the applications of parametric insurance, and Philippe very kindly outlined the basics of parametric insurance and introduced it. And just to kind of reiterate, it's a risk financing instrument that pays out pre-agreed amounts to a policyholder according to predefined event characteristics. And by event, I mean hazards, natural disasters. So I've given the quantity, the example of rainfall quantity, but hurricane wind speed is the other one that we use commonly. But also you can have a sea surface temperature or an index of that which responds, say, to coral bleaching or the high likelihood of coral bleaching. And we select the predefined event characteristics such that they are a good proxy for the losses or the damage or the impact that event is going to have on the particular client or the activities of the client that they are looking to get a payout to contribute towards. And as I'll say in the next slide, those kind of the end uses of the insurance are various, and we have three kind of good examples of actual end uses of insurance payouts. And it's important to think about that from the get-go. And then the thresholds are set to trigger payouts if those pre-agreed parameters are met. I think it's important to point out at this point that generally more intense events do more damage and require more resources to respond to. So the parametric indices on the whole are not a single trigger. They don't reach a threshold and then you get the full payout. Generally we try to put together programs where the payout increases with the intensity of the event and therefore the likely extent of damage and financial resources required to respond to that damage. So I think a lot of the kind of the high level press around parametric insurance is that it's trigger based, and if the trigger happens then you get the payout, but it's actually that's only in the very simplest form. We have developed much more sophisticated tools for using the concepts of parametric insurance to better meet individual client needs. And the bottom part of this slide kind of reiterates mostly what Felipe has already laid out in terms of what you need for a parametric solution. So I'll skip over that. No, I will skip over that, but I'll touch on that as I describe these three case studies. So we're looking here particularly at the role of parametric insurance for blue infrastructure and use cases relevant to coral reefs. I'm going to use cyclones in all three examples here because those are the ones that we've actually gone through implementation on, but and indeed the Quintana Roo program that Felipe described is for cyclones as well. But we have done quite a lot of work on similar mechanisms for heavy rain, which induces high turbidity and sedimentation on coral reefs, and coral bleaching as well. Bleaching is a particularly, certainly in some areas, is quite difficult to ensure because the frequency and severity of bleaching is changing so quickly, and so it may not be insurable already, unfortunately. But we do have some tools which we think are deployable, which may not be strictly risk transfer, but may be able to unlock financing or financial flows using parametric principles. So I won't talk about those here, but there's some interesting developments I think emerging on that, especially linked to the climate negotiations and climate COP. So I've listed four kind of end uses for insurance, parametric insurance for coral reefs. Rapid reef cleanup is one which we're working on with the MAR Fund, and I'll describe in a little bit more detail the example next. And so this is the case where the parametric insurance triggers very quickly, as Felipe described, and can be put to work very quickly to especially clean up reefs after cyclones. And I learned firsthand 25 years ago when I dived on a reef in the Caribbean right after Hurricane George went through, and the amount of debris that was on the reef was a shock to me, and it was very clear that debris sitting on the reef and the normal wave action over the reef was doing a huge amount more damage than the actual the initial impact of the storm and the storm waves. Hurricanes, when they come in from offshore, generally don't carry a lot of load, particularly a lot of human human debris. But once the rain especially has washed a lot of debris, and the wind has blown over and blown around a lot of debris, and that ends up on the reef, that's doing a huge amount of damage. So there's a great value in removing that and getting replanting coral, reattaching coral very quickly after the reef. And so parametric insurance is particularly applicable here because we can get the payment and put it to work very, very quickly. We've also looked at solutions which give cash payments to fisher folk, for example, so that they don't fish, and relieving the reef of stress so it can recover for a few months, weeks to months after a shock event is very beneficial. But obviously you don't want to interrupt the livelihoods of the fisher folk who are reliant on that on fishing. So you have to incentivize them not to fish, and you know, parametric insurance is a good way to do that. And they can just get a cash payment, and that can kind of tide them over. And they can also contribute, of course, to the response and recovery efforts as well. So there's a virtuous cycle there that we can explore and build on. We can also, the second example I'll show is as a kind of general hedge or business interruption cover. Sorry, could we go back again? For a business that is reliant on the services of a coral reef. And then the final example that I'll show you is a kind of a broader coverage. It's not specifically for a coral reef, but it's an application of parametric insurance for Belize, actually, which contributed to a restructuring of its sovereign debt and the unlocking of a major funding window over 20 years for marine conservation. So the next one, please. I realize I'm a little short on time, so I'll rush through these, but these will be shared. So I welcome any follow-up, both in the question and answer immediately following, but also over the longer term. So the parametric reef insurance we have in place from the 2021 hurricane season for the Mesoamerican Reef Fund. Leverages the MARFund's emergency fund. That is, MARFund is the insured entity. It already has an emergency fund, but the amount of money in that emergency fund is quite limited. So if there's a shock event and a major response is required, then it needs an injection of capital into that fund, and that's what the insurance provides. The MARFund, along with TNC, particularly in Mexico, but also in Belize and Honduras and Guatemala, all along the Mesoamerican Reef, has put in place a response mechanism. It has trained response brigades, but the piece that was missing was reliable funding that could flow very quickly after a big event to fund that response. And so that's what we put together. We used what we describe as a catastrophe in nested circles structure. And that will be gobbledygook to everyone except Philippe and perhaps a couple of others who I noticed were ticked the insurance box in Tamaki's second question. But you don't need to worry too much about that. But this structure effectively tries to capture the fact that a hurricane track, if it tracks closer to a reef site and is bigger or is more intense, is going to do more. Excuse me. Have more impact, and so you know, a high intensity hurricane tracking right over a coral reef will do more damage to that coral reef than a lower intensity track right over the same area, or that high intensity storm tracking further away. And so we have a matrix which is at the bottom there, which dictates kind of how much the payout is as a portion of the maximum payout at a given site, dependent on how far away the hurricane is or the cyclone is, and how intense the cyclone is. And so, and we validated this against our full reef damage model for the Mesoamerican Reef, and this structure, we adjusted the structure so that it validated very well. And so we have a $2.5 million policy in place, which covers all 4 of these sites, and we expect to expand, or we will be expanding that in 2022 to additional sites in Guatemala and Honduras. Under separate funding from the UK government, the main program is under German government funding. We've actually just started a program to expand into the insular Caribbean, so the northern and eastern Caribbean, continuing to work with the MAR Fund, but also with the Caribbean Biodiversity Fund. And we hope that we'll have coverage in place also in 2022 for that program. So the next example is a more specific in the Dominican Republic, at the eastern end of the Dominican Republic, and particularly around the marine protected area of around Punta Cana. And the area of Punta Cana and the Punta Cana Foundation has set up a marine managed area where a not-for-profit entity has the license to charge user fees for access to this area, and the business is going to be very heavily impacted by hurricanes. It's impacted because tourism arrivals, which generate revenue, are going to be reduced, particularly if the airport or the seaport gets damaged. I wonder if we could thanks thanks Michelle. Their revenue will also be dependent on and impacted by the loss in the quality of the ecosystem services being provided by the coral reefs, and so you know, they will likely see right after a hurricane has gone over the reef, and it will be damaged, and the quicker they can respond to that, and the more likely it is that more users are going to want to see that reef again. But also on the other side of their profit and loss balance sheet, as their revenue is falling, their expenditure will also rise, because they will need to respond to the damage to the reef, but they will also need to invest more in longer term conservation, because they have conservation targets which they need to meet under their licensing to be able to generate revenue. So there are a lot of downsides, both on the revenue side and additional cost side, that can reasonably be captured in a parametric structure which protects their business. Is good for the business itself, but also for the investors in that business. And that business has a number of investors through a marine sustainability investment fund, and this is a useful tool to protect those investments. And then the last example, the last slide.
Simon, I'm really sorry to interrupt, but we do have quite a few questions in the queue and 10 minutes left to go. So I wonder if it's okay to share this example over just the slides that we share, and then we'll move over to questions. Right. So I'll go just pick one of the questions. So the first one is, in determining the ecosystem service value of the coral reef in Quintana Roo, was the disaster resilience service the only aspect considered, or was the tourism-related ecosystem service value taken into account as well?
No, I'm happy to answer that. The hotel activities, the economic activities around the reef were definitely taken into account. And as I mentioned, the partnership we had was not only with the scientists at the TNC and the local government, but also the property owners of the hotel, you know, business on shore. And that analysis of the ecosystem was definitely including them to assess, right, the benefits of this coral reef post hurricane. So definitely that was the case. I'm not so familiar with the other examples that you touch on, Simon, but I would expect that if there is an economic interest, you know, impacted by the event, then they will definitely be a big contributor in, you know, developing the solution, also funding the solution. Yeah,
I just add that you know, the different use cases will have different kind of values assigned to them. So with the MAR fund, we looked particularly at the cost of response by the brigades. But in the second example, we looked more at the impact on the fund for a particular business, on the funding flow or the fund flow for a particular business. But and as Philippe said, that can be expanded if it's on the public sector side. Then the impact on economic value generation, which usually there are multiple beneficiaries of the coral reef, and all of those beneficiaries have an interest in the quicker recovery of a coral reef after an impact.
Thank you. And so the second question is, so in this case, we're talking about insuring the reef itself, but what about the assets protected by the reef, and how reef enhancement would reduce the risk and incentivize these investments?
So I'll start with that one and then pass it over to you, Philippe. But I kind of hinted at this as one of the use cases, but and to be honest, it's something that we I think from the insurance industry side, we are working, and I know the TNC have done a lot of work on this as well as others, on seeing how we can materialize those benefits through the insurance process. And the theory is very solid, and there's been some great work on capturing that value for coral reefs, for mangroves, and those are the two best known examples. But actually, the value that is captured of the protected value is distributed amongst many users of insurance. Those users of insurance often buy insurance from different insurance companies, and within the overall portfolio of that insurance company, those people who are buying insurance and are protected by the reef may only be a very small portion. So the impact of the protected value of the reef may be quite diluted in any particular insurer, and then that insurer is often passing that risk on to Swiss Re or other reinsurers who are taking the ultimate risk takers. So there's quite a complex kind of web of actors involved on the insurance side, and so that tends to kind of dilute and fragment those benefits, and therefore capturing them and in the way that we would like to, so that they can be reinvested, is actually quite challenging. But there are some initiatives started, and you know, we're all certainly invested. I know that Philippe and Swiss Re are, as well as TNC, in trying to kind of unravel the intricacies and try and bring this to a demonstrable project where this theory can be put into practice. Philippe?
Yeah, no, so I think, you know, we have to think about the different dimensions, right, of these solutions and what they bring. And so for coral reef, you have to think about what are the beneficiaries, again, what are the threats, and what are the insurance solutions, right? So on the the whole interdependencies of these three dimensions. So on the beneficiary, it's about protecting the businesses, the communities. It's about generating tourism, visitor revenue. It's about maintaining the ecosystem, the healthy marine ecosystem, fishing supply, for example. Right? All these benefits are there. Then you have the potential threats around the storms, the hurricane, destroying the reef, the beaches, and so forth. And then think about the third pillar in terms of the solution, the insurance solutions to protect or to restore, right? To protect the coral from further damage with the quick recovery of the action through the fund, or to restore, right? What could happen to the coral in investing in caring and returning the ocean, quality once it's treated. So, all these dimensions have to be considered. The beneficiaries, again, the potential threats, and what's the insurance solution to the natural assets. And then you can go through the list of all the natural assets, mangrove or sandbanks or dunes, as I mentioned, and then again, applying these three dimensions.
Thank you, Philippe. All right, so the next question is linked to the payout. So is the payout linked to the requisite restoration efforts? And if so, how do you monitor the success of the restoration effort over time?
So I can talk to the case in the Mesoamerican Reef Fund, where the insurance payout itself is not tied to how it's used. The Mesoamerican Reef Fund have the ability to mount responses. They have the necessary permissions in all the countries. They have the relationships with the entities that are actually going to be doing the work. They've been involved in training activities, etc. So and all of this is written down in protocols and procedures. So you need to establish, to be able to be for the insurance to be in place from a regulatory perspective, one needs to establish that the client has an insurable interest in the coral reef, and that they have access to that reef to deploy those funds. But the insurance process itself does not require evidence that those funds have been used for that purpose. On the whole, in some cases it may do, but in the case of the Mesoamerican Reef Fund, it doesn't. But of course, the funders, usually the purchase of the insurance, if it's will want to see that the payouts are being put to use. So certainly in all the activities that I've been and projects that I've been involved in and that Willis has been involved in, that kind of monitoring of the use of the payouts is an integral part of the project. And I think that one should assume that even if it's not required as part of the insurance transaction, it should absolutely be part of the thinking and the implementation of an insurance mechanism. Standalone insurance, where the payouts are just paid and then no attention is paid to how it's used, is not going to be sustainable, and it's not good for building out the overall use of insurance tools in this space.
Yeah, and just echoing what Simon just said, there is this great feature of the parametric insurance solutions, which is the flexibility in the use of funds. But as you develop the solution, you think about the payout and the management of the payout. And in the context of Quintana Roo, it was this coastal zone management entity that was created that is administering the solution and deciding how is the fund going to be used to send brigades to restore the reef and cover the costs associated with that. So it is managed, but the tool itself, gives a lot of flexibility as you develop the solution.
Thank you. I think we have time for one more question. And so that's, how do we get ensuring nature-based infrastructure or natural infrastructure to be a standard practice? So the example is, if gray infrastructure like seawalls or bulkheads can be insured, why not green infrastructure? Yeah,
so there's a lot of work, right, in this field right now. A lot of organizations are involved at the international level, at the regional level, to make this kind of green infrastructure a proper defined asset class, well recognized, quality infrastructure and so forth. And so, we are very engaged. Many parties are involved. Willis is engaged. Many other insurance players are engaged to get that kind of level of startup. And in a way, it's about applying the existing expertise of the industry to natural assets, right? It's about enabling the de-risking of ecological engineering or nature-based construction. And there are products that exist in insurance, such as delay of startup or construction liability or force majeure. And so, all this is there, it exists. It's how it's recognized by the regulators, by the investors, and we can get maximum value out of these, instruments, or investments. And so it's a big ongoing effort. I would say that, great progress was made. COP26 helps. The journey continues to get where we like to be.
And I just also add that there's a communication issue as well here, and I think that Philippe and Swiss Re have done an amazing job of helping to bridge that communication gap. But when you have, as Philippe mentioned, there are tools and processes in place, and they've been applied to terrestrial man-made infrastructure for decades, hundreds of years actually. But you know, those tools haven't been accessible to blue solutions, let's say, nature-based solutions. And part of that is because the conservation side hasn't really spoken the same language as the investor side and as the insurance side. So I think we need to continue these kind of conversations and start to bring those communications closer together, start to speak the same language, and then hopefully we'll be able to make these tools more accessible and more commonly used.
Thank you. I know we are a little bit over time. We do have a few more questions that have not been answered, but we'll work with the presenters to get them answered and over to the participants. And before we wrap up, we'd like to ask you a final question. How did you find out about this webinar? Again, thank you so much for participating in today's webinar. We encourage you to continue the conversation on the Reef Resilience Network discussion forum. Again, the recording of the webinar will be sent via the Reef Resilience Network mailing list. If you're not on the list and would like to be, please email us at resilience@tnc.org. You can also follow the network on Facebook and Twitter at Reef Resilience and watch all past webinars on YouTube at Reef Resilience. Thank you everyone for joining us, and thank you to the presenters. Goodbye.
Thank you.
Thank you.